Hey, what's up everybody? Today it's the second video of the day. Blowout earnings by Tesla. Blowout huge earnings by Tesla. Actually, they were expecting a loss. The earnings were enormous. The stock jumped 50 bucks in after hours. That's up 20% already. Microsoft comes in, beats earnings. Listen, you know, the core of what I do is following these fiscal flows, the leading flows. That's the government spending. 40% of all government spending flows to corporate profits. We had a record year of spending that just concluded in fiscal year 2019. Fiscal year 2020, which we just started October 1st, this year is forecast by the Congressional Budget Office, and they're pretty good in their forecasting models, to be 200 billion more than last year. So the earnings boom is going to continue. All right. Stock market's going to be up on this news tomorrow. We had a good, strong close today. Listen, I know a lot of you follow that blog, Zero Hedge. Follow that at your own risk. I like to tell people that is an awful blog. I mean, they actually blocked me on Twitter several years ago because I made some comments about some of the articles they were posting. But if you follow Zero Hedge and if you act on their articles and their posts, I don't see any way that you could possibly make money, because everything they talk about is doom and gloom. And they're completely out of paradigm when it comes to understanding the monetary system. You know, they've absolutely attacked MMT at every opportunity. They don't understand floating exchange rates and non-convertible currency, the regime that most of the world is in. These are hard money type articles that they post up there. We're not on a gold standard anymore. But really, everything on Zero Hedge is doom and gloom. You know, they've been talking a lot about the Fed's liquidity measures, the repos, and the operations, monetary operations that they're conducting now to basically, you know, this is just to stabilize their policy rate, to sustain their policy rate. We know that in August, the Fed brought reserve balances down too low. They went below the threshold of the 10% reserve requirement. They had to bring them back up. And since September, we saw the Treasury's account at the Fed go from something like, what, 110, 113 billion up to almost 400 billion right now, 380 something billion. So almost a 300 billion reserve drain just from the Treasury selling securities and collecting taxes. So the Fed has to offset that with these operations that it's conducting in order to sustain its policy rate. And we see, you know, that's exactly what they're doing. That's what they're supposed to be doing. And this is a stabilizing factor, as I spoke about in the past. It's being portrayed, at least on Zero Hedge, as this, you know, calamity, this very extreme operation. The Fed has lost control. You know, there are comments like this. Now, for people who don't understand, they look at these headlines, they look at these articles, they get very scared, and naturally you can understand why there is so much negativity, why there is so much pessimism, and at the very best, why so many people are just non-committed to the market. They're in the neutral camp because they're reading articles like this, which are, you know, very scary the way they sound, and they take that as information when in fact it is really not information at all. It is a lack of understanding of what is going on. What the Fed is doing right now adds stability to the situation. Stability is good for the markets. How many times do we hear, oh, the market hates uncertainty, the market hates uncertainty? Well, the Fed is removing that uncertainty. This is the one time in the Powell Fed anyway that I'm going to give them some credit, and just a little bit of credit because basically they are fixing a problem that they created, which goes back to earlier this year when they brought reserve balances down too low. So you're removing the uncertainty, you're adding stability. That is a very positive environment for the markets, but most people, again, if you're going to read Zero Hedge, I'm just telling you, read it at your own risk. Take it with a grain of salt. I mean, they really don't know what they're talking about. That is a blog run by a group of people who their goal is to have a high traffic blog. That's how they make money, through advertising and web traffic. I mean, it's not so important to them that they get it right. They have a business model, and their business model is to have a highly trafficked blog, which I got to give them credit, they have that, but the information is terrible on there, and it is always slanted in a negative fashion. So if you're going to read that, you're going to have problems. I'm telling you right now. The best thing you can do is take that off your bookmarks. Don't look at it, ignore it, because if you look at it, it's not going to be very helpful. So, positive day. Oil was up, as I mentioned before, the EIA report. Again, if you want to get a copy of my full analysis of that report, or if you want to get, MMT Trader, which every week I go in depth to these things. We follow the numbers every single day off the daily treasury statement. The information, the data that I use is real time. Everybody else is looking at stuff 30 days behind, a quarter behind. No, we have the information every single day. And that really gives us the most up-to-date pulse on economic activity, what is happening. And these flows, these fiscal flows lead everything. So the core of everything are these fiscal flows, these leading flows, and these reserve flows, which is a separate issue. These are tradable short-term developments. We'll talk about both of those things. All right, everybody, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye.